This is the briefing for Friday, August 26th. A lot of damage was done in the stock market today. Chairman Powell, on his speech at 10 o'clock Eastern Time today, certainly nixed the markets and gave traders a reason to begin selling. Now, up to this point, we've had a pretty good run to the downside, going all the way back to January of this year, and you can see this move to the downside. This is the spiders, by the way, on a daily basis. And then we reached this June 17th low, and then certainly we were in store for the potential for some type of counter trend rotation, and that's exactly what started to happen. You can see even at this low we started to see a divergence in breadth. Breadth was becoming stronger even at the June 17th low. Then we got this pause for about 2 weeks, and then of course we extended up, and then we broke through 420. Breaking through 420 was certainly an important event because it suggested the possibility then, because the next at least intermediate term resistance was up at 460, and at 460, if that was tested, then we were going to put in potentially new all-time highs. But we stalled right at the 430 area in the spiders, and what was significant about that, and I talked about that in briefings, is the fact that breadth was diverging and diverging pretty dramatically going into the high of August 16th, and you can see that right through there. I just put a trend line in right through there, and then of course we got a potential test of that high on even lower volume the next day, and then of course a little bit spike in volume on a retracement higher, and then of course the selling started. Now I qualify my comments on this all the time in terms of technical patterns, but we do have, at least in the spiders and the Qs, this is somewhat of a head and shoulders top. Now, if that's the case, then the neckline comes in right at 410, which is an important intermediate term support area, which is now resistance. We closed really at the 405.32 area. So 410 is important resistance in Monday's trading should we see some type of move back to the upside or some type of pause. But if this is the case, if this happens to be a head and shoulders top, then the spiders would project the next stopping point down at 388, which is pretty interesting because 390 is the next support level that comes in right at this area of rotation, and then below that is going to come in right around the 373, 374 area. So watch what happens, especially if we reach the 388 to 390 level in the spiders. Now you can see volume ticked up today. That was another thing that was really giving me a lot of heartburn with this rally here, is that each time we went higher, volume fell off and fell off even more. Now I want to talk about the NASDAQ right now, the Qs. You can see the same thing here. You can see a little bit of a shoulder ahead and then a shoulder. And then, of course, we broke there through the 320 area. Now, the Qs, if the projection, if this is a head and shoulders top, the next projection is at 288, which is right at the 300 level, which is the next intermediate support level of the Qs, the upper extreme of this area of rotation. So it's very interesting that these two projections come in right at about the same point in time. Now, I hate to talk about these patterns because this is not a head and shoulders top until it breaks through the neckline, which it has done, and then we see where it projects down before we see the next stopping point. So at least for right now, and there is always a small probability we could see this whole day retraced on Monday. I'm not saying that's going to happen, but there's always a possibility of that happening. And that's the importance of developing a strategy for each day. You know, sometimes I joke myself about, well, the market's either going up or the market's going down. But that's the case each day. What we have to do in our analysis is develop a strategy that if the market does this, we're going to do that. If the market does that, we're going to do this. So I have a high probability assessment of one event occurring over another before the market opens. Based on that, I know where my trade location is going to be, and I know exactly what I'm going to do if the market does this. If it happens to do that, which is the lower probability, that is becoming the higher probability, then I know exactly what to do at that point in time as well. I know where my trade locations are. I know where my stop management is going to be. And typically I will already have thought about my position size depending on the price development of the market or the instrument that I happen to be trading. So right now, looking at the 288 to 300 level in the Qs, I think is going to be pretty important. And the same thing with the spiders going back to the 388 to 400 level, really important levels in those stocks or those ETFs. Now, everybody is probably wondering whether we're going down to test the June 17th lows. We really don't know that for sure. Economically, environmentally, probably the news is not good. Powell even said that there's going to be pain. So we have to hold open the possibility, but then again, we have to follow what the market tells us it's going to do. And right now, the market tells us that the next level stopping point is 300 in the Qs and 380 or 390 in the spiders. So I'm getting my charts mixed up here. So basically, we have to hold that open as the higher probability. Now, we closed at the low of the day. That suggests the market would have continued moving lower today, except it closed. So we have to anticipate that we will see additional downside movement on Monday. Now, the importance to that is going to be what happens with market breadth, because at the open, if breadth is stronger than it was today, it was 29.12 in the NASDAQ breadth, and in the NYSE breadth, it was 23.03. So if it's stronger, then that suggests there is some strength coming into the market, and we have to anticipate a lower price than potentially some type of pause or rotation back up if there is a breadth divergence. Now, we did reach a point of being extremely oversold in both the indices. So you can see this extremely oversold condition in the NYSE, and the same thing in the NASDAQ. So that's going to be very important. Now, just because we're oversold doesn't mean that we're going to pause or have some type of counter trend rotation, but it does tell us that, or at least it tells me that on Monday, if we open up lower and there is a divergence in breadth, then I'm going to be tightening up my stops, and I'm not going to be adding to positions, because that's telling me the market is strengthening and it is ready to pause and work off some of this extreme oversold condition. So watch for that on Monday morning as well. Also watch for a gap down that begins to be filled on stronger breadth. That would be the same thing. Now, the other thing is that if we open up and we continue moving lower and breadth continues at least in this area, then that's going to suggest we may see Monday a test of this 390 level and lower support levels in the other indices as well. Important to what's happening now is what happens with volume. Now, those of you who have been listening to these briefings, or at least the daily briefings, you know that one of the things that I've been saying and has given me a lot of heartburn is the fact that this rally, this is the spiders, and this is total volume on the NYSE. You can see even in this rally that volume has been falling off and falling off pretty dramatically. I mean, even look at this level here where we were trading in this level here. So the rally was not attracting buyers, and it was just giving me a lot of problems in terms of holding positions overnight, because at any time we could wake up and find the market has gapped down, but there was really no selling pressure. Even in these corrections, there was no selling pressure. Volume didn't increase, so there just was not any pressure, or sellers were just not beginning to dump their shares. NASDAQ, you can see NASDAQ volume was pretty sad also. Had a little bit of a spike in here, but then it did spike up today. Now, the important thing with volume is that you don't want to see it come in. You don't want to see this type of thing here. you want volume to build on itself. Now, similar to this here, you can see volume began to build there, and you can see price was declining. That's the type of volume we want to see if this is going to be something bigger in terms of time and price to the downside. So watch what happens with volume on Monday. That's going to be extremely important to see if on any additional move to the downside is volume increasing. Alternatively, and this is important as well, if we get some type of rotation up on Monday to work off some of this oversold condition, and volume is extremely low, that is a characteristic of a counter trend rotation. So that would then suggest that once that counter trend rotation or pause happens, that we're going to see a breakout to the downside, and potentially another pretty decent move to the downside that would test this 390 level in the spiders, and in the Qs, the 300 level. So basically, that's it. We have to anticipate additional downside on Monday, but if there's a divergence in breadth, that suggests a strengthening. If we do see more downside and there's not a divergence in breadth, then we want to see volume beginning to increase on an intraday and a daily basis, and then watch what happens when we reach these next levels of support in both the Qs and the spiders. Should be a very, very interesting week next week. Have a great weekend, and I'll pick this back up for you subscribers on Monday evening.